Welcome to the Disruptor Network podcast.
Kent Ritter is a former management consultant and corporate executive, turned full-time real estate investor. He is now CEO of Hudson Investing, a multifamily investment firm that's helping real estate professionals and professionals alike scale their real estate portfolios. He found financial freedom and he's teaching others to find theirs. This is a great podcast. You don't want to miss this. So now, Kent Ritter.
Ignition. Liftoff.
Welcome back to the Disruptors Network, and I have Kent Ritter here today. And we just talked in his intro that he's a multifamily guru. So I have some questions myself. And Kent is the CEO of Hudson Investing. And Kent, welcome to the podcast.
Yeah, thanks, Ralph. Appreciate you having me on, man.
Yeah, I mean, I was on your podcast before, and we kind of got into this conversation a little bit. But when I really started going through your I did some research on you. I watched some podcasts you were on before, and you've been on plenty. And you have an interesting story. You went from being someone who sold a business as an entrepreneur into real estate and then multifamily investing. Can you just give me a little background on what that story is?
Yeah, for sure. And you mentioned I've been on a lot of podcasts. So I had a goal to be on 100 this year.
Oh, that's awesome.
I've done like 65.
That's
so
amazing.
I've been on a lot of podcasts this year. Yeah.
Listen, I'm sure you can speak about that because that's something people try to do, and it's not that easy.
Dude, it's a lot. I mean, I've slowed down a little bit. Some days I was doing like 5 or 6 a day.
Wow.
During kind of a couple months ago, really to like get the numbers up. So yeah, no, we can definitely talk about that. But but as far as kind of my backstory of selling the business and getting into real estate. So the quick version is, I graduated from college, had a finance and econ degree, and I went into management consulting because I thought management consulting was going to be the best way that I could learn as much about like how to run a business as possible. Because what management consultants do is we essentially fly around the country working with different businesses, helping them solve problems. So I thought, okay, I can do this for a few years. It'll give me a great experience because like I always had this entrepreneurial streak, right? I always knew I wanted to own my own business, but coming out of college, I didn't know what that business should be yet. So I kind of said, okay, well, how can I learn as much about how to run a business so that once I know what that is, like I'm going to be in a good place to be, right? And so that's how I got into management consulting, was to really like set that framework. And it was awesome because I got to work with, God, I don't know how many, but hundreds of different businesses and see inside them, see what made them work, what made them not work. Really start to see some themes on like what doesn't work. Cause really they never called us when things were good, right? They always called us when things were bad. So like there was more about what didn't work than what did, but I was able to glean like, okay, don't do it this way. And so I expected to do that for like 3-5 years. Well, 3 years into my career, some colleagues and I actually left the firm that we were at, a larger firm, to start our own consulting firm. And that was the business that we ran. We ran that from 2010 to 2015, and we sold that at the end of 2015. And so it was a kind of like just crazy startup experience. It's like what you would see on TV, where it's literally, like 5 guys around a coffee table in somebody's kitchen, and then we actually got kicked out because we ate, my partner, we ate his wife's Girl Scout cookies one day, and she was like, "That's the final straw. Like, you guys got to get out. You got to get an office." And so fast forward, we end up with 95 employees, about 30 million in annual revenue a year, and we decide it's time to exit. And so we sold at the end of 2015. And that was really what started my real estate career, because I had this capital. I knew I didn't want to just invest in the stock market. I wanted to find alternatives. And so I started digging into real estate, started with a family friend who was a commercial lender. He got me involved in a few things more on the debt side. And then I got a closing statement one day for a house that I had the note on. And I'm like, man, this is cool. I'm getting my loan paid back. But this guy doubled his money in like 2 years for the equity in this house. So I'm like, I'm on the wrong side of this. I need to start buying assets. And so that really set me down the path. I had a few mentors who really led me. I was able to skip that whole like single family piece and from some good mentorship and move right into multifamily and understand the benefits there. And then move in even from buying my own multifamily, like just to syndication and learning what syndication is, which the simplest way to explain syndication is you're just pooling your money together with others to go buy something bigger and better than you could on your own. Right. So what I do now is I put those deals together for people, bring investors in, we all pool our money together, and then we go buy something big and bad out there that can make us a lot of money. And so all that kind of, if you through 15, I started learning, I started investing passively with other syndicators to really learn the business and kind of see behind the scenes, okay, how does this all work? So I invested in like 10 deals in 2016. I've invested in a handful of other deals since then, but then in 19, I co-sponsored my first syndication. Okay. And I would say even in that one, everything I've done, every step along the way has been like a step as a new level of learning. So even in that one, I wasn't like guns blazing, buying 250 units, going to do it all on my own. We bought 250 units in Atlanta, but I did it with a group of some guys I knew who had done a few syndications, were more experienced than me. And I would say I was more sitting like shotgun on the deal. Like I was right there in the front seat, right? I was helping them do things, but they were leading a lot of the strategy and still walking me through the process from being the sponsor. And so again, it was a great learning experience. We just sold that deal in June, actually had like a 25% IRR back to our investors. It was a fantastic return. Wow. And it was a great first learning experience. And then from there in 2020, kind of the next level of my learning experience, a mentor of mine owns a large private equity firm in Indianapolis. It's a multifamily firm. It's all they do. They have 15,000 doors. And he saw I was having some success over here. And he's like, hey, why don't you come join our platform? You can grow 10X on our platform because we already have everything set up and you can really build your business with us. And so I said, yeah, that sounds compelling. It's kind of this idea of, do you keep a big piece of a small pie or a smaller piece of a gigantic pie, yeah. Right? But I always saw it as an education source. I looked at it as like, okay, this is my real estate MBA. Go and work with these sophisticated guys, understand how they do things, and it's just that next level of education. And so I stayed there for about a year and it was a good partnership. But at the end of the day, that entrepreneurial streak, I can't shake it. And I wanted to be back out on my own. I felt like I'd learned a lot, but I felt like the value became a little lopsided in like what I was giving back versus getting. And so decided to get back out on my own and really replant my flag for Hudson Investing, which I'd started in 2019. And so since about May, I've been operating in that way. And we've got, 3 deals under contract right now that we're working to close, 3 large apartment syndications. And so we've really just been hitting the ground running.
I mean, the steps you've taken throughout your process are like everything I preach to people. Go learn from somebody else. Go learn from somebody else's mistakes. Like even when you got your degree and what you were working at as a management consultant is like the perfect training ground. Let me get an inside somebody else's company, see the mistakes they're making. Why do they need me to fix them? And then come up with a solution, but it's not on my dime.
Yeah.
Right? They're paying for me to do this. So
that's exactly right.
How did you discover that was the right process for you? Because it seems like throughout your whole career, that's been your process. Let me go learn from somebody else first, low risk, high reward, and then I'll take the risk on.
Yeah, I just, I think I'm a fairly risk adverse person as far as like, I'm willing to take the right risks, but I don't want to take dumb risks. And I think you take dumb risks when you can never have perfect information, but you should at least have, something, right? Yeah. And so I found this success formula, which I don't like looking back. You're right. It is kind of formulaic in the way I've done it, but I never set out really. It just kind of seems to work, but it is like exactly like you said, it's find folks that know more than I do, align myself with them, whether through a job or through a paid mentorship program or by providing value to an unpaid mentor. I've done all these things and try to learn from them and try to avoid and use that to avoid those big mistakes. And so everything that I've done, I've tried to have kind of a safety net, right? Of somebody or someone that I can go to because I'm just self-aware enough to know that there's a lot I don't know. And there's a whole hell of a lot that I don't even know I don't know, right? And when I'm getting into something new, I want to have those guardrails to make sure that, okay, you can swerve on the road, but make sure you're not going to hit a tree, right? Like that's how I kind of look at things.
And credit to you. It takes a lot of patience to do what you're doing. And I think a lot of what, all this information, and I think a younger generation, they're bombarded by all this information now, which I didn't have when I was younger. There was less information available, but I think some of that information is a detriment to them because it makes their process, they want instant results, instant gratification, and it takes patience to really build something great. So I think some of that is adjusting to what is new, and it's just, we have all this information and we think we can be successful immediately, and it really takes time.
Right.
And what you've done is you've had patience.
And it does. Yeah. And it has been patience, but it to me, it's felt like growth the entire way. You know, it's each step of the process has felt like growth. And so it hasn't been something for me that's been as much of a grind, you know. I mean, it's been, I guess you're right. Like it was like a 4-year process from starting in real estate to actually just being a part of even my first deal. Right. So, I mean, it was kind of a process, but it was, there's a lot to know. Right. And now I'm at the point where, because a lot of people partner to supplement their deficiencies. Right. And that is a very sound way to do business. Right. But I also feel like I'm at the point now where I know the entire process front and back. I don't really have to partner to cover a deficiency in an area. And so that allows me a ton of freedom. It also allows me to maintain control and to maintain all of the equity. And I can hire employees and contractors because I know what I need to do and I know the best way to do it. And because going back to my consulting days, like I have standard operating procedures and it's a process I can easily bring people into. And so I think there's a lot of benefits to that. I think the partner quick model is ultimately a formula that does not lead to success. And that's the path I see a lot of people take is, hey, there's 3 people, we kind of like each other. Let's slam it together and let's go buy a $20 million apartment building.
You're right.
And it's
with that, their short-term, it's the same thing. I think that their short-term goal is at such a level, they're willing to compromise to get to that short-term goal, which is take on partners. Where you're in a situation right now where you're like, look, I don't have to compromise, but I will if it makes sense for me based off my standard operating procedure.
Right. Yeah, that's exactly right.
So that I think that's great. I think that you have a very, very good process at this point. Do you prefer to be in control of the deals now, or how are you looking at multifamily investing now? Like, is it, hey, I want to work on bigger projects, so I'm still willing to partner, or are you targeting a certain unit count or something like that on deals?
Yeah. So really the unit count has really become more of kind of a minimum of there's just like, I've done the smaller deals. Like the smallest deal I've ever done is 29 units. Okay. And, I wouldn't do that. I wouldn't do that again. Like unless it's a very unique circumstance. I mean, there's so probably 50 up, but from the top end, especially after going, and working at that big private equity firm. I mean, everybody says this, but it's 100% true. The bigger it is, the easier it is, honestly. And a lot of that is because you can have dedicated management and you can have more sophisticated management and you can have more resources, whether it's technology, whether it's systems, whether it's people to run that thing. So, I mean, it's a heck of a lot easier to run a 200 unit property than it is to run a 30 unit property.
And that's the opposite of what you would think logic would be.
Yeah. Yeah. But it's true. It's absolutely true. And so the only thing previously keeping me there was capital constraints of, do I have enough investor money to go and buy these big deals? I'm not as capital constrained anymore. So I'm able to go after bigger deals because my network has grown substantially. And so, the focus has become, I'm still finding these niche deals, right? Like we do have some direct to seller strategies that we do where if we can get things off market at a great discount, it's going to make sense. It's going to be a home run. So I'll do a 30 unit home run all day, but it's just as much work to buy a 30 unit as it is to buy a 200 unit from the process you have to go through. And honestly, some things are harder. Like the debt is harder, so some of the financing is more difficult, things like that.
On the smaller projects, which again,
on the smaller projects,
is the opposite of what traditional logic is, but in your world, it's different.
Yeah, because the big ones have these these Freddie Mac, Fannie Mae, these organizations that are dying to give money, for these larger projects that they can see are very kind of cookie cutter. They don't like the ones with a bunch of hair on them, but if you can give them something that's very cookie cutter, like they'll lend you all day. So yeah, in many ways, these larger ones are smaller. Now, the smaller ones, from just a pure dollar for dollar return standpoint, in my experience, have been much better, have had higher returns. But you got to do the extra work for it.
Will work, yeah. And that makes, for somebody who's completely naive to what you're doing, and they want to get into large scale multifamily investing. I know you started, I believe you started with crowdfunding with somebody else's crowdfund first or something that way.
Yeah.
I mean, how do you suggest people get in to start?
Yeah. So I started investing passively with other people first. Right. And I did that because one, like I wanted the returns, and that was the only way I knew how to get real estate exposure at the time. Two, I wanted to use it as a learning experience, right? Again, we talked about educating yourself, like to get behind the curtain on these deals by being actually invested in them and understand, why are the syndicators doing this? Why are they doing that? Why'd they fund this that way? Why did they pick that renovation plan? Like, right? Ask all these questions. So I think personally, it was great for me to do that. I would recommend others do that as well. I think it's a great way to get familiar with the business, is to like start investing with others who are doing it and learn from them through that process. Now that can, again, be a slower process, right? I mean, it could be a couple year process, but that was a great way for me to learn. The crowdfunding thing you mentioned, I did my first 2 real estate investments on a crowdfunding site in 2015. And one of them I lost all my money on because the guy committed fraud. And so my big lesson there, which I try to tell everybody on every podcast, is, look, I got burned because I didn't do the due diligence I should have done. I had no idea who this guy was, and I didn't check on who this guy was. And I don't know if the guy could have had a rap sheet, 15 pages long. I would have never known it. And unfortunately, he was a bad guy. And unfortunately, a bunch of people lost their money because of it. But my lesson learned is, like, before you make an investment, like, vet the sponsor, speak to the person, get on the phone with them, at least like verify that when you talk with this person, you feel like they have integrity and there's somebody that you can like resonate with, right? Because your personalities just may clash, and like that's not going to be a good working relationship either. So at least get on the phone, do that due diligence. I mean, ask for references if you want to. I have people do it all the time. But like it's all about the sponsor. Because for me, it was like, oh, it's all about the deal, right? Oh, here's the deal in Houston. I'm scrolling down. It's like, oh, that looks like a good deal. Boom, click, invest. It's amazing how fast you can just invest in something.
Give me your money, yeah.
Yeah, and but it's not about the deal. It's not even about the market. It's about the sponsor first. Find the person you want to invest your money with, and then worry about what markets and then what deals they're doing. But like build long-term relationships with people that you're going to invest your money with.
Yeah, that's awesome advice. That was going through my next question, like how do you avoid some of the mistakes you made up front? But and in your situation, the money you lost on that deal was probably worth the learning experience to what you've learned to go forward, because I'm sure you made more money because you've vetted more people at this point. So
that's right. That's right, man. I mean, it's like I don't know who like originally said that, but there's a quote. It's like, you're going to pay for your education one way or the other, right? And it's like,
so true. Yeah. And every aspect of my life, I've learned that you're going to pay together. So where are you looking right now? I know you're based in the Midwest, but I know you said you're in Atlanta. Like, where are you looking at markets right now that you think are strong markets to be looking in for this type of stuff, or just in general real estate?
Yeah. So I live in Indianapolis. And so, I look in Indianapolis. Indianapolis has been a really strong city with a lot of growth over the past few years. And something I'll relate Indy to kind of the other cities I look at. And so one thing that I like about Indy is it's got a lot of job diversity, meaning there's not like one employer that if that employer leaves, the city is going to fall apart, right? Like there isn't one industry in Indianapolis that makes up more than like, I think it's like maybe 22% is the biggest, like of the pie, right? So there's like not one industry that's just going to leave and wipe us out. Furthermore, employers, there's a lot of different big employers there. Also, it's the city, county, and state seat of government. So there's a lot of government jobs. There's multiple universities. So there's a lot of higher education jobs. There's a lot of healthcare jobs. So think about government, higher ed, healthcare. those are all non-cyclical jobs. Those are jobs that whether the economy is doing good or bad, for the most part, like they're going to be there. Those are good, solid jobs, right? So you look for cities with good job profiles like that. And then the next thing you want to look for is job growth, because rent growth and job growth pretty much move one to one. There's nothing that's like more closely correlated to rent growth than job growth. Because if you think about why people live where they want to live, they live there mostly because of it's close to where their job is, right? Now in this remote world, that's changed a little bit, but historically that's true. And for the people living in my apartments, which is very much workforce housing, people with a median household income of like 40 to 60, 65,000 a year, those are people that largely are not working remotely. They're going to a job. They are construction workers. They're working retail. You know what I mean? So they're living close.
You make it easier to predict because that income level is mostly going to a job.
Yeah, exactly. And so I like cities like that. And so cities like that would be like Columbus, Ohio, Cincinnati, Ohio, Louisville, Lexington with University of Kentucky. These are all cities where we have properties. Even Dayton, Ohio. Dayton's overlooked, but Dayton's they got a nice university. They got some things going on there. So we look for cities like that. And then in general, additionally, the Midwest has seen booms from a couple things. One is logistics. So Indianapolis has a stat where you can reach like 75% of the United States within one day from Indianapolis because of the highway network and because it's so centrally located. So Indianapolis has the second largest FedEx facility in the world here. Louisville, Kentucky is the North American headquarters for UPS and have their big world port. And then up and down every highway, you've got all these Amazon distribution centers, Walmart distribution centers. I mean, the amount of warehouses that are going up in the Midwest is just crazy. And so we've seen a great boom because of that. And that's not something I really see slowing down. Right. And then the other thing that we've seen is we've actually seen huge tech job growth because of this remote work environment now where people can move to a lower cost of living place. And they can maintain their same job they had when they were living in San Francisco or New York or somewhere else where it's 3 to 5x more to live. I mean, I used to live in Chicago and the price of a home in Chicago is literally 3 times the price of a home in Indianapolis.
Yeah. I mean, I think you hit it on the head too. I think that people's habits, because of what's gone on in the last year and a half, have changed. And they'll probably be forever changed. Even I'm in New York City, and they were talking about people going back to work in September, and I'm sure some people will. But now they're talking about if you're not vaccinated, you can't come back. But even the people that are coming back, even in the financial businesses, depending on your position, some people are going to be back 60%, some people are going to be back 70, 80, 90%. So I think everything has changed at this point.
Yeah.
And I think we have to adjust to trends. That's great insight, by the way. Like, that you're looking at the logistics of places and if they travel to work, whether if they don't, or if there's and you're right, warehouses are going up all over the place. So it's really interesting. So I have another question now. At what point did you get to the level where you realized you had to look at those? Because I think even if you're a single family property buyer or whatever it is, like those are really important stats. Like when did you realize that was important for you, for what you were going to buy and how are you accessing that stuff?
Yeah, you know what? It's definitely evolved over time, right? And as I've just gotten more and more sophisticated, and as I've seen more deals, and I've really like this was the thing about consulting was we were always trying to find when we went to a new business, we were always trying to figure out. Basically, we'd say like, okay, what are the levers that you can pull that really impact that business? Because there's usually like 3 or 4 things, right, that really can drive the needle. And so that's like how I think about multifamily investing too, or like, what are the few things where you can really simplify this that really matter? And like, just jobs. It's like really, it's about jobs. Yeah. And if you follow the jobs, like you're going to be fine. And going to work at the big PE firm, I mean, and seeing how they did things, obviously that led me to a whole different level of sophistication on what we look at. I mean, there's a whole list I could go down beyond what we talked about, but I think it's critical because like, it's just like you said with the single family stuff and like the real estate adage of like location, right? Like it's true. There's a reason people say that. And that's why even in multifamily, it's just as true in multifamily. If you buy in a bad neighborhood, in an area where there's no jobs, like it can look the best on your spreadsheet. Like you can make your spreadsheet say whatever you want, right? And the returns could look amazing, but then you got to translate that into reality. And like, and if you're in an area where the population's not growing, where major employers have left, and there's just not a lot going on, it's going to be tough to realize your business plan because you don't have that growth around you to support you wanting to raise rents and fix them up and do all this stuff, right? So you've got to make sure that the market and then the sub market that you're in are places that people want to be, and you've got to have like a really good. You should be able to explain to people pretty easily like why it makes sense people want to live there, you know. And but yeah, I mean, but it's super critical.
I think it just what you said. I think if somebody did their due diligence that way, whether they were buying the house for themselves or they were buying it for investment purposes, just that, and a lot of this information is out there, but just doing that kind of due diligence would make it would be a better purchase long term.
Yeah, absolutely.
So obviously I said, I feel like you're patient and you go through a process at this point. Do you have certain long-term goals and short-term goals at this point, like yearly or how do you set those goals for yourself, time frame or whatever?
Yeah, I mean, that's a really good question. And, I've reached a lot of my goals that I had over the past couple of years I've reached. And so really it's a time for me where I need to spend some time kind of reevaluating now on what the next level of a lot of these things are. Cause I had goals of like, I wanted to reach, well, I told you about the one, I wanted to do 100 podcast interviews, right? And I'm on track to do that. That's a short-term one. That's all about just spreading awareness of my brand. I had another one where I wanted to get my podcast to 10,000 downloads a month. And we're there. We've hit it. We're not, I'm between like 8 and 10,000 a month right now, but we've hit it. And so again, that's another one where I thought it was going to take a lot longer. So it's like, okay, well now where are we going to take it? Right. That my next goal for the podcast is to really monetize it so it can support itself. But then from a real estate standpoint, my goal is to, right now, I've been setting up a lot of those standard operating procedures we talked about, right? And so my goal is to continue to, and I've got 6 to 7 virtual assistants and contractors that are working for me right now in different capacities. And so my goal over time, though, is to transition into a more kind of traditional structure where I have some key people I can bring in, into the business as employees and really move from being in it day to day to be able to work on it and be more strategic as I bring in like a director of acquisitions, a director of investor relations, and a director of marketing. Like I want to grow the business in a way so I can spend my time strategically working on it and not in those day-to-day swim lanes.
Yeah, that's a great point. I heard an old interview with Jeff Bezos recently, and he said, when I first started Amazon, I would have to answer 100 questions a day. And now I only answer 3 or 4 questions a day, but they're really important questions. Yeah. But then he also said, if you came to congratulate me on our great quarter, I would have no idea what you were talking about because I'm always thinking 3 and 4 years down the line. The person that's running the quarter is the president now, the CEO now, but I'm not thinking about it. And that really resonated with me for business purposes because he's got to be in his highest and best use every single day. And his highest and best use is thinking for the future. And what's next, right? So that's my question to you at this point now. Like, I see the plan, and what do you think your highest and best use is for yourself, for what you want to do and for where you could be most effective every single day?
Yeah, my highest and best use is really in 2 things with the business right now. It's in building relationships with my investors and creating new relationships with investors. And then 2 is building relationships with brokers and new relationships with brokers and using those relationships to expand into new markets. Right. And so that's the way from the start of this business, I was trying to be very intentional and use a lot of the lessons, all those lessons I've learned, right? And the way that I'm trying to look at it is, look, if anything is not doing one of those 2 things, then I need it off my plate. And I've got to find somebody else to take that. And so that's how I've ended up having like 6 or 7 virtual assistants, even at this point, doing various things for me.
Yeah, I mean, but that's great. And this goes back to what I said about you originally. This is a great conversation to talk about. Like, I have a plan. I had some kind of long-term structure in my mind, and I'm still working on that structure, but that's where I'm headed. Like, I think that you're very intentional about that. And that's probably why you've had so much success.
Yeah. I mean, my goal in 2016, let's say, was to be actively syndicating my own deals and leading my own deals, right? That took 5 years, let's say, 4, whatever, to get there. But that has been a major goal for me for a long time. And now I'm here this year doing that on my own completely. And so that's a big one now where I really need to say, okay, well, what next? Right. Because that has been like the mountain far off in the distance for the past 4 or 5 years for me.
Yeah. I mean, listen, it's a good mountain to be on at this point now. So that's congratulations that you're there. First of all.
Yeah. I mean, and the coolest thing about it, Ralph, honestly, is like, I love what I'm doing. Like, I can't say I always loved what I was doing, you know, like even when I was a management consultant, I mean, that professional services work is hard because like oftentimes we're being hired by like the board of directors or like a CEO, but the people we're working with day to day are like the mid-level managers, and like none of them wanted us there. Yeah. It was like, why are you looking under my rock? You know, why are you trying to dig up, my dirt, stuff like that. And, so I got burnt out on that. The thing that I was passionate about was growing our own business, not as much the services that we were delivering. Sure. And so I had a period, and that's why a lot of us kind of got to that burnout point. That's why we decided to sell. One of the reasons. We also got a really good offer, but for this, like, I don't see myself getting burnt out. Like, I just love it. Like, I'm just having fun. I'm like a deal junkie now, where I just love finding that like diamond in the rough deal. I'm like, nobody understands the value here. Like, I'm going to create all this value. It's going to be amazing. Right. And then seeing it come to fruition is so cool.
Yeah. You know, what's funny. I completely agree with you with as far as the real estate side goes. Like, I think my highest and best use when it comes to that, to my portfolio, is looking for the properties, finding the right properties, finding the right markets. And I love doing that. Mm-hmm. And I would love to do more of that because I'm passionate about it. So it's fun. It's really fun to me. I never don't want to do that. I always want to do it. So I know what you're feeling. It's that feeling being in something where it's really, really, you're like, I really am enjoying this. The whole process of it, I'm enjoying. So I'm just I've tried to set up my portfolio where I can do more of that every single day. And literally to the point where all the other stuff, I try not to be involved in it all if I can. Once a week I'll meet on it, but I don't want to talk about maintenance. I don't want to talk about guest services. I don't want to talk about all that stuff. I really want to contribute because it's better off for everybody else too if I just do that every single day, because this is how we're going to bring in more money.
Yeah, 100%, because you create so much more value doing that than answering those questions. And the only way that you can ever get out of those day to day is like you got to create the standard procedures, right? So everybody knows what to do. And then you got to be willing to delegate, which is hard for a lot of people, right? Is being able to just give up control. And the hardest thing about giving up control is you got to be comfortable with like 80% is going to be good enough, because nobody's ever going to do it as good as you would, right? Like, it's not their business, right? It's not their baby. So like those are hard concepts to get around. And that goes back to like my consulting days of like trying to like get that into people's heads. Cause that's one of the major things I talk about, like key things that don't make businesses fail or just not grow. Is one of them is the inability to delegate and give up control.
So, when people come to me like, I want my business is growing, and I always look at it as two things, and I always tell them the same thing. I think there's a hole in your process, and the hole in your process is either something you're doing every single day that, you can't control. It's a crapshoot whether it's going to go good or bad. That's a hole in your process. How do you fix that? Or you're not delegating, so you've created a ceiling for yourself that you can't get through, and you're never going to get through because you're not willing to delegate. Yeah. So you've reached your capacity, and that's what it's going to be. So either get used to that or learn how to delegate, right? So it's not that easy to convince people.
No, it's not. It's not. I mean, it's something that it's a learned skill, I think, like anything else, and it's something that you have to get comfortable with. And but it is the only way to I think really grow, and it's the only way to reach your highest and best use, right? Because none of that stuff you said is going to create as much value in your business as like you said, finding good properties, finding good markets, right? So that's how I'm trying to look at it too, is like, what can I do day to day to create the most value? And I'm not there yet. I mean, we're still building this thing, so my hands are in everything, but but eventually that's my goal to get there to I love what you said about Bezos of like, I'm always looking 4 years down the road. Like that's the right perspective for the leader at the top,
And I listened to a podcast recently with the CEO of Compass, Refkin. And the interviewer was interviewing him mostly about real estate and what how we built the agency and I got to the end of it and I was like, I didn't hear what this guy's superpower is. Like he didn't speak to me about. He was speaking about day-to-day business, but when I got the phone, I realized I was like, I think what his best use is. He's a great money raiser. He was great at coming up with a concept and getting people to invest in him for the concept. He may not be a great day-to-day operator, but he's a great. He was great. And sometimes. Maybe we don't get to the right questions, we don't realize what it is, but I think that's the whole entire thing. Like, where are we best suited? And if you're an innovator, then you have to be able to innovate 3-4 years down the road. And I think for you, for your purposes, you have so much data at this point, right? Like you're a management consultant, you were in other situations, you have a lot of data. So like, you probably have the ability to really innovate, but how do you get to the point where you could just be doing that every single day?
Yeah. And that's honestly one of my biggest struggles right now is you said I'm patient, like where I'm not patient is like, I want to be there right now. And so just understanding and trying to give myself a little grace that like, it is a process, right? And it's got to be about the process. It can't be just about the end goal. Because if it's just about the end goal and you get there, then you kind of say, well, what's next? But I'm trying to just really like ground myself in that moment of like, look, you just kicked this thing off in earnest 3 months ago, right? Like we've made a ton of progress. We got 3 deals under contract. We're raising a lot of money. We're getting great investor feedback and relationships, but it's going to take a little time, and so like just one, like I've got a clear vision of where I want to be. I just want to be there now. I don't, that's the hardest part.
I understand that. I'm patiently impatient every single day. And,
right.
The thing I have to keep telling myself, and I think you should too, is when you get to the point where you think you want to be, you'll want to be someplace else. And like, it's just probably who you are as a person. And that's why you've grown so much. So it's a good problem, not a bad problem.
Right. I know. It's just about making sure that I don't get too frustrated about it. Right. You got to maintain the right mindset. Yeah. And that's like so much of life, right? It's all about mindset. And
because I think frustration in the situation will affect your decision-making process. And that would be the worst thing that could happen, right? Like, I'm not thinking clearly because I'm just frustrated for the wrong reasons. Like,
that's right.
Look back at what you've done.
That's right.
Listen, I actually got a lot. I'm in the business for 20 years, and I get a lot when I've spoken to you twice, and I've gotten a lot from you twice, so I appreciate it. Where can people get more of you or what you're talking about? Like, where's the best place to hear you speak or get in touch with you?
Yeah, there's 2 places really. The first is my website, kentritter.com. And you can get my blog, my podcast. I've got some resources for new investors there, so check them out. And it's really oriented for the passive investors. So people that want to invest, alongside folks like me and want to learn and feel comfortable in doing that because it's a big commitment. And so that's really what the website's all about. Okay. The other place you can find me and you can find Ralph there actually too, is on my podcast, which is Ritter on Real Estate. And it just posted. I think you were episode. It was just last week. I want to say episode like 53 or so. So man. So you can find my podcast too. And again, my podcast really focuses on multifamily investing, but it's really oriented toward, again, kind of the passive investor and the people that are trying to make decisions on how to judge a sponsor and a market and a deal. And like, my whole goal is to help you guys miss the mistakes that I made. Like, just skip over those, learn from me and move on.
That's awesome, man. And I appreciate you coming on, and we'll definitely keep connecting and speaking in the future, but Absolutely. You gave great information. And again, thank you. I learned some, so I may be in touch on some certain things that I need some help on.
I'd love to, Ralph. Yeah, man. Happy to help. And this has been a great conversation. So thanks for having me on.
All right, man. We'll talk to you soon.
All right. Bye.
Thank you. What a great podcast with Ken Ritter. He really dropped some gems on us on how he's building portfolios and how you can actually build a portfolio. He started with nothing really. From a different business, came in, built a huge real estate portfolio. He really gave us some details on how you scale that business. And multifamily investing is an awesome strategy for real estate, and I hope you all got something from that. Stay tuned for the next Disruptors Network podcast.